Hello trading friends and welcome back to Forex Focus, brought to you by IG. Taking a look at a rough start to the week for US dollar fans as euro and gold prices appreciating as the US dollar depreciates, as a new round of rate cut sentiment is entering the US market for dollars and interest rates. More on that interest rate piece in a second, but let's start off with the US dollar price action. Here it is relative to that euro, and you can see euro bouncing off of those recent lows from around 107 back above 108. Obviously, this is a market that has been higher in recent months, and in recent history has been as high as 120, 1.25, but has been feeling out the lower end of the range in recent trade around 106, 107, able to bounce back here around 107 and now heading past 108. We'll see if this euro continues to appreciate and if the US dollar depreciation continues, as the only real news seems to be that US yields have, at least in the short term, peaked and turned around in recent trades across the board. The 2-year, 5-year, 10-year yields all moving lower in recent trading, as a new round of rate cut potential could be coming as soon as May or June. We'll talk about those projections in just a second, but it's worth noting that gold prices also on the rise as US dollar and US rates diminish here. And gold, similar type of price action over the course of the last week or so in this market as that euro market, which is to say headed down to its recent lows and looked like it might take another leg lower, just like it looked like euro might head down to 105 near the end of last week, coming off of the high inflation data in the US. Gold prices looked like they might move down below $2,000 for the first time in year-to-date trading. For the first time in the last couple of months, $2,000 has been the approximate low for gold, but a really big bounce back here in recent trading as this market's heading close to 2050. And you'll remember that historic highs for this market, as long as gold futures have been around, which is more than 20 years of data to back up the historic high of around $2,100 in gold. Not far from that here, as the difference between this gold market and euro market is gold near its historic highs, euro closer to its historic lows. But either way, both markets appreciating against this depreciating US dollar. And a lot of this is coming from the interest rate story here in the US. And you might say, well, in March, the projections are still very unlikely that they cut 25 basis points. You can see 91.5% chance that they stay at the current rate of 5.25 to 5.5%, with the Fed funds rate at the March 20th meeting. And that's unlikely to change, even though we'll have more inflation data here in the coming weeks between now and this meeting, and another round of employment data in the US that could sway things in the other direction. More than 90% chance of no change. It would probably take a big move in that inflation data, really get it close to 2%, that target that the Fed wants, for them to think about a cut. As you'll remember, last meeting, Fed Chair Jerome Powell said that it's very unlikely that they cut in the March meeting, although he does see them cutting at some point this year. And that's what brings us to the June meeting, skipping over May, because that one is still close to 50-50, leaning a little bit in favor of no change in May. You can check that for yourself. But I jumped to June because this is really where they're expected to cut rates for at least the first time. If not, they've already been cut by this point, as you see close to 80% chance of Fed funds rates being lower at this June meeting or by it at least. Now this does look like the overwhelming likelihood, obviously, but keep in mind that this stuff can shift very quickly. As we saw this type of distribution, this is what it looked like a couple of months ago for the March meeting, which is to say more than not likely a chance that they were going to cut in March back in November and December of 2023. Now we're approaching that March meeting, and it's very likely that they don't cut. And what happened between the end of 2023 and now has been higher than expected inflation data. And so this higher than expected inflation data can continue to trend in that direction, and they could price out cuts for this May-June timeframe. But in recent trading, dollar depreciating, gold rising, euro rising again, as the market's starting to price in a higher likelihood that rates in the U.S. are cut either in May, but most likely by the June meeting at close to 80% likelihood. But let's conclude with the projections for the end of the year here, because the timing piece of it might be semantics at this point, as like I say, Fed Chair Powell has said that they are likely to cut at some point in 2024. The market is still pricing in 3 to 5 rate cuts, but you'll remember the recent rise in U.S. dollar and the recent fall in euro and gold and some of those markets priced against U.S. dollar has come with the fact that there were 6 or 7 rate cuts priced in at the end of 2023, and now it's down to only 3 to 5 rate cuts. We can get back into that 6 to 7 rate cut range if inflation drops, if employment data drop, but just as easily we can get closer to only 1, 2, or 3 rate cuts, which might coincide with a resurgence in U.S. dollar strength. But for the time being, we're seeing some U.S. dollar weakness and the market starting to price in some more of these rate cuts, or at least greater likelihood that the U.S. gets rate cuts in general in 2024, and thus you're seeing the rise in euro and gold prices.